The kind of big headline for me was the capital expenditures commitment, $20 billion this year. As you know full well, it's way beyond what they might do in a typical year. So let's start with that. It's clearly a signal that these things that Elon Musk has kept you guys looking to the horizon on for some time, now it's on paper. It's time to act.
Yes. Well, I think the capital expenditures are not too surprising to us. We had fairly aggressive investment estimations in our public valuation model. But that's all to say, I think the next 5 years for Tesla will be dominated by the robotaxi story. We've previously published, we think this could be attributable to over 90% of the enterprise value for the company in that time period. And, in order to put many vehicles on the road, which is their plan, they need to invest. Of course, a lot of that money is going into factories, AI infrastructure build out. So, I think the story here is that Tesla, while they were, second or behind Waymo in terms of a commercial launch for a robotaxi platform, they have an incredible scale that is really not matched by anyone in terms of the public announcements that they've made of putting actual vehicles on the road. Right.
On Terafab specifically, you and the team at ARK know full well, a fab at that scale is a fixed cost of $20 to $30 billion. And the CFO was clear this is not reflected in their CAPEX forecast. But there's a reason that the industry doesn't put memory, logic, and packaging on one site. That doesn't exist, but it is Musk's proposal. How seriously are you taking that?
Well, I think, he's always been a very ambitious CEO. I would interpret this as, look, he's concerned Tesla needs a lot of chips. They have grand ambitions for AI data centers in space. We think, that could be a really interesting play, especially as launch costs continue to decline. It could actually be cheaper than data centers on Earth. So, I think the way to interpret it is that he knows that he needs a lot of chips. We've seen him vertically integrate in the past in the electric vehicle business, for instance, and parts of the supply chain that he did not see popping up in the U.S. that they needed in the U.S. So, I think this sort of fits in with what he's done in the past, albeit, yes, it's a major announcement for Tesla. So I'd say broadly that, I would interpret some of it as a call to action that, he is looking out there at the supply chain. But yes, for now, they have this very ambitious plan. And again, I would focus on at least from a valuation perspective, on the robotaxi picture here. Of course, they'll also use those chips for Optimus, but I would focus on robotaxis.
And let's focus just on what you have told the market you anticipate. If I'm right, by 2029, what is it? The stock will hit 2,600, 88% of the company's value will be robotaxis. And you've talked about the millions of robotaxis that really could be produced by then. To that end, how integral is the XAI integration, if we're going to think about integration? Is that important for the story and the $2 billion, well, basically capital allocation that was made towards it?
So, of course, we hadn't previously accounted for that. The way that I would think of it is, on the call they mentioned, of course, they're making Grok available in the vehicles. I think the more interesting parts of the story are, of course, they could potentially share AI infrastructure investment and mutually benefit from each other. He did mention that Grok could sort of act as this maestro for Optimus and for the robotaxis in terms of, networking them together and sort of being the AI control center, if you will, for robotaxis and any sort of large-scale Optimus project. So that's how I would think about that investment.
Let's talk about this robotaxi unlock then. What needs to fall into place for the 2029 moment to occur from your perspective? Because at the moment, we've got just a handful in Austin that don't have someone in the driver's seat. How quickly does that scale, do you think, in realistic nature?
Yeah, so you're correct that, there really are only a handful that currently have no one in the driver's seat. They did say, though, that they have 500 robotaxis and that they plan to double that every month. I mean, if that's true, if you look at Waymo's fleet, the last reported number we saw was about 3,000 cars. So in other words, Tesla could surpass Waymo's robotaxi fleet within 3 months. I mean, I think that's incredible if you look at the fact that Waymo launched the service back in 2019. right? So again, I would focus on the fact that this is like unmatched scale. They're a vertically integrated player. They do not have to partner with other auto manufacturers. This also gives them a cost advantage. So in the Big Ideas presentation that we just published, we estimate that they have a 50% cost advantage over Waymo on the next generation vehicle if you compare it to the Cybercab. So this is really what matters for Tesla scaling robotaxis that competitors do not have. On top of that, they have a data advantage. If you look at Waymo's miles, we estimate they're doing around 400,000 per day. Tesla gets 17 million miles of FSD data per day that they can use to train the fleet. So that is something that competitors just do not have in the robotaxi front. And it's important, that scale is important because we think that what will drive robotaxi adoption is a reduction in the price per mile. So today, human-driven ride-hail costs over $2 per mile on average. We think at scale that could be profitably priced at 25 cents, but the reality is there's a lot of headway in between that $2 and 25 cents to make profit.